Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Tuesday, April 5th. Firstly to the S&P 500, and here we see strong selling in the market today following the black body candle of the previous day's trading. The previous day we saw the buyers lose control, the sellers take some weak control on that candle. And the formation of the black body suggested that net momentum had shifted from the buyers of the previous day, which was quite strong, to the sellers. And even more so today, the sellers have closed with strong control, very strong commitment. They've taken out the Tenkan-sen support, which is very important, and closed down below there in a bearish manner, which may be a significant change in sentiment. And also the large black body suggests very strong downside momentum. Now the problem for the sellers, if they are going to continue, they're going to have to be strong enough to breach down through the bottom of this highlighted zone of support and resistance. And 2040 is the lower boundary of that. And that has been an area that has provided strong support in the past and at times resistance. So benchmark moving forward for the next day is going to be 2040. If we do see the market breach through there for tomorrow's trading, we could quite easily end up trading down to 2019, and the breach through there could see us trading down to around the 2000 level. In terms of Ichimoku, however, we're still bullish in the longer term and the medium term time frame, but we were looking a little overextended as the market was trading to these highs up above the Ichimoku cloud and the Kijun-sen. And we know that in terms of Ichimoku, we move from equilibrium into disequilibrium. Disequilibrium are these moments when we have this strong trending activity and we trade away from the Ichimoku indicators and we move back towards those indicators. And that's the normal process that's occurring now. Now, the things that upset that move back to equilibrium are these areas of support and resistance, or even perhaps in this case, if we do trade through 2019, we could find equilibrium at the Kijun-sen, and then the buyers come back into the market. In terms of the Chica span, that is still supporting this bullish price activity, so it is suggesting that we're likely to get a minor pullback and then see the buyers come back into the market. Interestingly, this previous test that we had at these highs, the last time we were trading up here, last two times we saw price rejection, very strong price rejection the last time, the market traded all the way down to 1813. So let's just be on the lookout for a repeat of the very strong downside price activity that we saw from the last rejection from this area. Having said that, however, the Ichimoku cloud was much closer that time, and it's much further away, so we're likely to get stronger support coming in after the market has sold off for a while, whereas the support was breached quite quickly there, and then we sold off strongly with the sellers in control. Now, in terms of the bands, and if you recall, we were looking at this upper band around here to hold as support, and it's failed to do so today. This is the first strong bearish close within the bands for the last month or so. And if we do see some strong follow through, it will be the first time that we've seen the market going on with the move. We've had two approaches within the bands in a bearish manner, and there was no follow through. What we're looking for now is for the middle of the bands at 2035 to hold as support. And if it fails to do so, and we test through there, we could end up trading down to the lower band where we're likely to find some strong support on this first approach. Generally, when markets tend to transition from these strong uptrending phases, they tend to break out, find support around one of these areas, or break out, then no follow through. They tend to retrace and find resistance within the bands and then start to sell off. So this process may take a little time, although it doesn't always happen like that, but that's the general way. If we do see very strong selling and we do close down below that lower band in a bearish manner and we see strong follow through after that, then we could see continued down selling. But at the moment, there is still potential for the market to find support within the bands here. Now, just revisiting previous double bottom pattern that developed at the start of the year, this double bottom with the intervening peak, the market broke out to the upside and we've almost reached our target. Our target was up near this previous resistance and we've got to within a few points of there. So target has been pretty much found, and this large double bottom has turned out to be quite a successful pattern to trade. At the moment, we don't have any strong patterns in the market here. But just looking at this trend line, we have breached the trend line with a strong bearish close down below it. And this suggests that the trend that the line was describing, that it's lost momentum. Now that's all that trend line breaks are telling us. They're not telling us about trends, because this trend is actually still up, and the break of the trend line here is all about loss of momentum. But combined with the fact that we've closed in a bearish manner down below the Tenkan-sen, it certainly does look as though we may be seeing the start of a change in sentiment in that faster term time frame at least. Next to the Nasdaq 100, and we've seen a change of trend confirmed today. If you recall, yesterday we were watching this very small candle that developed, suggesting a loss of momentum of the buyers and the shift in momentum weekly to the sellers, and a gap down today in the formation of a window, another window. And we were watching this large window that's held as resistance today, and the rejection from there, with the market gapping down and the market closing down towards the low today, suggests that the rejection has been quite strong, and the window is still in play as a potential resistance area. If we do revisit there, it extends up to about the 45.91 level. As I've mentioned, sellers in control, very strong price rejection, and now around the edge of the bottom of that window, that long-term window, is this other smaller window that's developed, so even strengthening the potential resistance just down around 44.94, 95 or so. To the downside, we're in a downtrend, and we do have potentially strong support roughly about this 44.48 level, with the Tenkan-sen trading around there. And there is even stronger potential for this zone to act as support, stretching down to about 44.21. So around the top of that, around the Tenkan-sen, roughly about 44.48, 44.50, down to about 44.21. In terms of Ichimoku, still bullish in the longer term and medium term time frames, supported by the Chica span, and this is a normal pullback that is probably healthy for the trend in the longer term and medium term time frames. On the Kagi chart to change to the downside. Now that serves as a good warning if we do trade down through there. And next to our Heiken Ashi charts, and here we've seen a change of trend, and the formation of a black body candle on that change of trend suggests that the buyers are no longer strong in the market. The sellers have now taken control. This is a black body candle, a decent size to the black body, and no shadow on the top of the candle suggests that there is some strength to this trend that has developed, and we know that from the candle chart itself, being a very large black body candle that's opened up towards the high and closed down towards the low. This first time frame downtrend to continue. Now just moving to the VIX indicator, and we have seen some activity here. The VIX has moved higher off these cyclical lows, suggesting that there is some fear entering the market, and we normally do see that when we see some selling coming in. Importantly, however, the VIX oscillator has moved above the benchmark 5% level, and when we do that, we do tend to see the moves develop further to the downside. So this is suggesting that we could see a continuation of this first time frame downtrend. The high yield bond spread is continuing to trend up, suggesting that the spread between junk bonds, junk corporate bonds, and government bonds is increasing, suggesting greater risk for the equities market, and that has been trending up for some time, giving us a strong warning that we may have seen a peak, and this at the moment is suggesting we could see continued downside in the equities market.